Assalamu alaikum and hello everyone. This is Zeeshan, a teacher of ACCA paper financial accounting. So in this paper, what we'll be doing? We'll be doing some questions of financial accounting from ACCA Study Hub practice questions. Right. So without wasting time, let us dive in and start the question practice. And here it is. Our first question from the ACCA Study Hub. Okay, and the question is: A business prepares a business prepares a statement of financial position at the end of each accounting period. Are the following descriptions of the characteristics of the statement of financial position true or false? So, statement of financial position is prepared to reflect the position of a business on a particular day. A statement of financial position records the income and expenses. No, no. A statement of financial position records the investment of the. No. Statement of financial position shows the assets of the business and how they are financed. Well, okay. So what will be our answer? Firstly, first one, a statement of financial position is prepared to reflect the position of a business on a particular day. Yes, it is true. Okay. Then a statement of financial position records the income and expenses of the business. No, it will be recorded in statement of profit or loss. Then we have a statement of financial position record the investment of the owner of the business. Well, yes, it will be recorded in the capital. Okay, then statement of financial position shows assets of the business and how they are financed. No, it not shows that. So statement of financial position is prepared to reflect the position of the business on a particular day. This is normally the last day of the accounting period. Okay. The statement of financial position does not record the income and expenses of the business. It records the assets, liabilities, and equity of the business. Statement of financial position records the investment of the owner of the business in the equity section as capital and retained earnings. And finally, the statement of financial position shows the assets of the business and the financing of those assets through a combination of liabilities and equity. Therefore, this statement is true, right? So the last statement, sorry, I said, oh, it's true. Okay. Then moving ahead, which of the following statements about sole trader is true? Okay. A sole traders can vote themselves a dividend as a form of payment. No, it's not true. There is separate legal distinction between the owner assets and the business assets. For sole traders, it's not true. Okay, the business can be sold as a going concern by its owner. Yes, it can be done. So C is true. We do not need to look at the D option even. This the business can be sold as a going concern by the owner. So this option is true. Dividends are forms of payment to owners of a limited liability company. Sole traders take their ranks from the business. Therefore, this option is false. There is no separate legal distinction between the owner assets and the business assets. To this option is false. And finally, sole traders, just likely any other business, can employ others to do work. However, sole trader is more likely to do a lot of the work themselves. Therefore, this option is false. Okay. Next, identify which of the following statements are advantages and which are the disadvantages of being in partnership compared with setting up a limited liability company. Less regulation and governance rules to follow. Okay. Partners are jointly and severally liable. No perpetual succession. Financial information is given only to tax authorities and lenders. So Okay, less regulation and governance rules to follow. Well, yeah, it's an advantage. Okay. Uh, Partners are jointly and severally liable. Well, that's a disadvantage. Okay. No perpetual succession. Well, that's a disadvantage. And finally, financial information is only given to tax authorities and lenders. Well, yes, that's an advantage. Okay. Um, Companies have more regulation and best practice governing how they should be run. This statement is an advantage, and partners are jointly and severally liable, which is a big disadvantage. If the partners has debts, the lender may pursue all of the partners or just the ones with money. Therefore, this statement is a disadvantage. No perpetual succession is a disadvantage. It would be useful to pass on the business to family or to sell it as a going concern. And finally, financial information is largely kept private with a partnership. Therefore, this is an dis sorry advantage. Okay. Um, I hope it's clear till here. Then next question: which two of the following statements might be used to define the term financial reporting, calculating the profit of a project, uh, recording recording of all business transactions, summarizing of financial transaction and position, presenting future cash flow for decision making. Well, yeah. So the correct answers is B and C. Okay. The definition of financial reporting includes recording all transactions, summarizing the information in a statement of profit or loss, a statement of financial position, a statement of cash flows, and analyzing financial statements. So answer A is incorrect because financial reporting is concerned with the whole business entity, not a specific project. This type of accounting would be referred to as management accounting. And then answer D is incorrect because financial reporting is concerned with past transactions and not future cash flows. Okay. Next is a business is preparing financial statements at the end of the accounting period for each item. Select in which statement or financial statement you would be able to find the information. Statement of okay, for each item, the amount of money owed to owners of the business. Okay. Um, Next is the debts of the business, and the next is the amount of overhead expenses required to run the business for 12 months, and amount of cash paid for non-current assets. Right. So amount of money owed to the owners of the business will be goes to statement of financial position. The debts of the business again in statement of financial the amount of overhead expenses required to run the business for 12 months, that is statement of profit or loss. Then amount of cash paid for non-current assets is statement of cash flows. Cool, right? Then which two of the following items would be included in okay, which two of the following items would be included in the equity section of the statement of financial position? Inventory, share capital, which two? Okay. Inventory, share capital, bank loan, land and building, share premium, bank and cash. Okay. So the correct answer is share capital and share premium. Share capital represents the nominal or par value of the shares issued to the owners of the company. This is reported in the equity section of the statement of financial position and represents an amount owed by the company to its shareholders. Share premium represents the access paid for the share above their par value or the nominal value. This is represented in the equity section of the statement of financial position and represents an amount owed by the company to its shareholders. Land and buildings, inventory, bank and cash are also the assets of the business will be used to drive future benefit. Bank loan is liability that has to be repaid at a specific point in time. For each statement, select whether it is applicable to limited liability company or to a sole trader or partnership. Okay. So honors take drawings from the business, a limited liability company, sole trader or prop partnership. Okay. A business has a separate legal entity. Okay. Honors of the business can be separate from those running the business. And finally, honors can easily be transferred in part or in full. Okay. So, first one, owners can take drawings from the business. Both can do sole traders or partnership. Okay. Um, Business has a separate legal entity is for the limited liability company. Owners of the business can be separate from those running the business. Again, limited liability company. And last, ownership can easily be transferred in part or in full. It's again for the limited liability company. You know, uh, next question. Chang, Yen, and Yu are in partnership together. Their business has been very successful, but now Shang wishes to reduce his input and have the option to sell part of his share of the partnership. Yen and Yu wish for the business to continue operating and also have children that they wish to include within their business venture. However, they do not want their children to be personally liable for the debts of the business. Which strategy should charge Yin and Yu follow? Continue with the partnership but negotiate a new profit sharing agreement. Reflect Shang reduction in profit. Dissolve the partnership. Set up a new partnership with Yin and Yu. Dissolve the partnership. Set up a new partnership with Yin, Yu, and other family members. Set up a limited liability company with Shang, Yin, and Yu as shareholder. Okay, so option D is the correct one here. They should set up a limited liability company with Shan, Yin, and you as shareholder. This would allow Shan to have a reduced working contract with the company and to sell his shares when he chooses and give limited liability protection to the other investors. Answer A would allow Shan to reduce his workload but wouldn't satisfy his need to sell off part of his share of the business or Yin and you desire for legal protection, dissolving the partnership and remove Shank from the partnership completely. But this is not what he wants. Okay. So D will be the correct. Then which two of the following statement describe the scope of financial reporting? Okay. So it provides a purely qualitative analysis of the company's performance. It provides a forecast of future results. It provides a record of the company's past performance. So, C, yeah. And then it provides quantitative information regarding all company assets. It provides qualitative and quantitative information regarding the company's position. Okay, cool. Last question, not last, sorry. For each of the shareholders listed below, identify whether their primary concern is the level of the profit made by the company or the level of the cash liquid assets held by the company. Okay, tax authority, supplier, bank, and lender. Okay. So tax authority will look at your profit, company's profit. Supplier will look at the cash and liquidity assets. The bank will look at the cash and liquidity assets, and lender will also look at the cash and liquid assets. Okay. Tax authorities are particularly interested in the level of profit of a business makes because they determine the level of tax it will have to pay. They are less interested in liquidity because the tax authority will rank above most accounts payable for payment. The bank will be interested in profitability, but for more concern about the liquidity of the business. Okay, suppliers and lenders are interested in whether they are likely to be paid. If the business is struggling to pay its debts as they fall due to this, will mean that these stakeholders may have to wait longer for their money. Okay, Jay has his own sole trader business. He is keen for his son to follow his footsteps, and when he retires, he wishes to hand the business over to them. He has been successful in business in his work and want to project his personal assets from third parties. Jay has sought your advice about whether he should change the type of the business entity that he has currently. Which one of the following answers meets Jay's requirement? Remain a sole trader, undertake a partnership agreement with his sons, set up limited liability company, get his sons to set up as individual sole traders. Well, set up a limited liability company will be the better option for them. For his sons to share in the business, Jay would have to either create a partnership or set up a limited liability company. Setting them up as an individual sole traders would not allow him to pass on the business. However, if Jay wants to separate his personal assets from those of his business, he has no option other than to set up a limited liability company. This option sets an upper limit as to the amount that an investor can lose, which is the size of their investment. The investor's private assets are kept separate from those of the business. Okay, let's moving ahead from the following list. What are the two disadvantages of operating as a partnership compared with a limited liability company? I would suggest, okay, change of the ownership is more difficult. Financial statement must be made available for public company scrutiny. Profit sharing agreement must be made by partners. So yeah, A and C are our answer. Change of ownership is more difficult for a partnership. So this option is a disadvantage. The partnership may need to be dissolved and new partnership created if a partner wishes to retire. Partnerships which do not have an equal profit sharing would formally agree on the salaries and profit sharing of each partner. This should be a legal agreement. And fourth, therefore, there is an expense to initiate and then to change it at a later date. Therefore, this is a disadvantage. Answer B is incorrect as financial statements are not available for public scrutiny. So, this is not a disadvantage of a partnership. Limited liability companies must submit their financial statements for public scrutiny. And the last one is answer D is also incorrect because a partnership is not restricted to maximum of four owners, so this is not a disadvantage. Okay, state whether each of the following statements about the sole trader is either true or false. Owner is wholly liable for the debt of the business. Okay, the business will set up articles of association to define its constitution. Business asset from the part of the owner estate on death, and the business can borrow on its name. Okay. So the owner is wholly liable. Yes, it is true. Okay. Business will set up article of association. Well, it's false. Business assets from part of the owner's estate on that. Yeah, true. And finally, business can borrow money in its own name. That's false. Okay. Uh, you know, and owner is wholly liable for the debts of the business because for a sole trader there is no legal separation between the business and the owner. Article of association are set up by a company, not a sole trader. Business assets from part of the owners is state on that because there is no separation between the business and the owner. Sole trader's business cannot borrow money in its own name and therefore it has to rely on its owner to take out loans. State whether each of the following statements concerning the purpose of the statement of financial position is true or false. Okay. Well, statement of financial position show the assets and liabilities that a business had during the 12-month accounting period. No. Statement of financial position shows the assets and liabilities that the business has at the point time, specifically the last day of the accounting period, not during the 12 months of the accounting period. Then, statement of financial position attempts to show the market value of the business as a whole. Well, it's false. Okay, because a statement of financial position does not show market value because many items are shown at cost rather than realizable value, and many intangible assets such as internally generated goodwill are not included. State whether the following statements about the disadvantages of a limited liability company either true or false. Okay. Financial statements are available for interested parties to view, which means a loss of privacy over financial information. Yes, true. Control may be held by the someone who does not take part in the day-to-day activities of the company. It's also true. Okay. So limited liability companies, unlike sole traders and partnership, must present their financial statements. For public access, small companies are often give some exemption over the amount of information that is made available. Therefore, the statement indicating there is a loss of privacy over financial information is true. Then directors are appointed to run companies on behalf of their shareholders. A majority shareholder does not have to be a director. Therefore, the statement of that control may be held by someone who does not take part in day-to-day activities of the company is also true. Bridge company is a rival business to River Company, which one piece of financial information from River Company financial statement is Bridge Company most likely to pay the most attention to each year. Okay, sorry, here it is. Bridge Company, which one piece of financial information from River Company financial position is Bridge Company most likely to pay the most attention to each year? Okay, and amount of trade receivables, amount of long-term debt, amount of non-current assets. Well, gross profit percentage. The option amount of trade receivables, amount of long-term debt, and amount of current assets are all assets or liabilities. These would give competitors an idea of the size of the organization and its gearing. The gross profit percentage option is a piece of financial information that each company would find of most interest in reverse company financial statements. This allows each company to see if River Company is achieving larger margins than themselves. Bridge Company would already be aware of its competitor selling prices, then it would be able to assess whether its own cost of sales is lower or higher than River Company. This might encourage Bridge Company to source better discounts or to change suppliers. There are a number of legal framework features that a partnership encounters. The following statements regarding partnership is either true or false. And partners' exposure to debts and liabilities unlimited. Partners' financial statement must be made publicly available. Okay, the first statement is true. Partners' exposure to debts and liabilities unlimited. This means that each partner is liable for any debts, penalties, or liabilities that is incurred by the partnership. The second statement is false. Partnerships are not legally required to make their financial statement publicly available as opposed to the public limited companies. Huh. Which of the following are the features of any partnership? Okay. Honor management jointly liable. The first option itself is correct. We do not need to look others. Although some types of partnership may have a separate legal entity status in certain jurisdictions, it is not a journal feature. Okay. And the last, uh, not last actually, a business prepares a statement of profit or loss at the end of each accounting period, indicate whether following statements are true or false. Okay. The statement of profit or loss is prepared to reflect the position of the business on a particular day. False. A statement of profit or loss records the income and expenses of the business. Yes, true. Um, Statement of profit or loss records the investment of the owner of the business. Yes, it's false. Statement of profit or loss is prepared on the accrual basis. Yes, true. Okay, the statement of profit or loss is prepared to reflect the performance of the business throughout the year, not the position of the business on a particular day. Statement of profit or loss records the income and expenses of the business for the year just ended. Statement of profit or loss does not record the investment of the owner of the business. And the last, this is found in the statement of financial position. The statement of profit or loss is prepared on accrual basis. Okay. I hope it is clear till here. Now we will move ahead and we will look on some other questions, some more questions. So let's start with it. Are the following statements about the definition of an asset true or false? An asset is controlled by the entity as a result of past events. Okay. The business has control over the asset. When an asset is sold, it will make a profit, and the asset will increase in value. Okay, so business is expected to drive future benefit from the asset. So yeah, first one is true. The business has control over the asset. Yes, it's true. When an asset is sold, it will make a profit. No, it will make a gain on disposal. Then the asset will increase in value. Not necessarily. It will depreciate. It will its value will goes down. In most of the cases, which two of the following items are assets of a business: sales, cash at bank, share capital, and money owed by customers. So it's so the cash at bank and money owed by customers, that is the receivables, are the assets of the business, and in particular, they are the current assets. Both. Okay. Which of the following statements correctly describes the concept of duality? Each business transaction increases two accounts by the same amount. Each business transaction decreases two amount by the same amount. Each business transaction increases one account and decrease another. Each business transaction has a two effects on the account. Okay, so D is the right answer. That is, each business transaction has two effects on the account. The other statements do not describe the concept of duality. Okay. Uh, Okay, Zeta business has closing net assets of 160,000. She started the year with capital of 100,000 and introduced additional capital of 30,000. Her profit for the year was 50,000. How much did Zeta take and drawings from her business during this year? So it's, net assets is equal to opening capital plus capital introduced plus profit minus drawings, right? What are the net assets given? 160,000. Opening capital is 100,000. Capital introduced is 50,000. And from there, we will reduce the drawings. Okay. We will rearrange the equations, that is drawings is equal to 180,000 minus 160,000, and we will get our drawings, which is 20,000. That's it. Which of the following expressions shows the accounting equation at the end of the first accounting period? Net assets is equal to capital profit plus drawings. Okay. Uh, no. Assets is equal to capital introduced plus profit minus liabilities. No. Asset is equal to capital introduced minus loss minus drawings minus liabilities. No. Net assets is equal to capital introduced minus loss minus drawings. So that's the answer, the D. Net assets is equal to capital introduced minus loss minus drawings correctly shows the accounting equation. Loss and drawings both reduce the amount of capital included in a business. Answer A is incorrect as drawings should be deducted as they reduce the capital invested in the business. Answer B is the incorrect as drawing is missing from the equation and liabilities should be added, not deducted. And the last one, answer C is incorrect as although loss and drawings are correctly shown, liabilities should be added, not deducted. Uh, um, Moving further ahead, which two of the following expenditure should would be classified as expenses? Purchase of a computer for office use, that's the asset. Repairs to factory equipment, um, purchase of goods for resale to customers. Okay, that's inventory, and purchase of a software license. So, so B and C. Repairs to factory equipment and purchase of goods for resale to customers are correct as they are day-to-day expenses and therefore can be classified as expenses. Answer is incorrect. Okay, as a computer for office use is a non-current asset and is therefore classified as asset expenditure. And that D is incorrect because purchase software license is a non-current asset and therefore classified as asset expenditure. Now, Hamza runs a business selling cars. He purchased two cars at auction. One will be sold to a customer, and the other will be used by one of his managers for the next 18 months. For each car, which account should be debited to reflect the acquisition. So, car for sale to customer will purchase, and the tangible non-current asset for use by manager. Okay. Car to for sale to the customer is a purchase of a good for the resale. Therefore, the double entry to record this acquisition. The first one is purchase debit and bank credit. And the last one, car used by a manager is a purchase of a tangible non-current asset. Therefore, the double entry to record this acquisition is its tangible non-current asset, or you can use the word car, whatever is it, and bank So tangible non-current asset or car will be debit and bank will be credit. That's the double entry. Okay. Then PR rents a rental outwear where he sells computer equipment. For each of the following items, choose whether they should be classified as asset expenditure or the expenses. Asset expenditure, quarterly rent. Okay. Computer equipment for resale, building insurance, fixtures and fittings. Okay. Quarterly rent is our expense. Yes. And computer equipment for resale is expense. Okay. Building insurance expense. And finally, asset expenditure, that is fixtures and finding or fittings, is asset expenditure. Okay. Now, next question. So, Minui is a sole trader who has the following information about her business: opening at net assets, closing net assets, drawings, capital introduced. What was Minui's net profit for the year? So, our equation is closing net assets plus drawings plus, oh, sorry, not plus, minus capital introduced minus opening net assets. That's 120,000 plus drawings is 30,000 minus the capital introduced is 40,000 and the last is opening minus opening net assets 50,000. Overall, what will be the answer? 60,000. And here it is. C is the answer. Which two of the following items would be classified as revenue expenditure? Purchase of the shares in the company for investment purpose, purchase of building insurance, purchase of a computer equipment for the administrative office, payment of sales, staff wages. So yeah, purchase of building insurance and payment of sales staff wages are the correct answers. Uh, Option A is incorrect because this is capital expenditure because it is purchased for long-term use to generate economic benefit. B is incorrect because this is cost of running the business. C is incorrect. Sorry, B is correct because this is the cost of running the business. C is incorrect because this is capital cost because this computer will be used for at least 12 months. And option D is correct because this is the cost of running the business again. Okay, I hope it's clear. Which one of the following expressions can be used to find the amount of drawings taken from a sole trader business during an accounting period? So opening assets minus closing net assets plus capital introduced plus net profit for the period. A itself is a correct. We do not need to look at other options. Okay. Opening net assets minus closing net assets plus capital introduced plus net profit for the period. The form of the accounting equation that you are already familiar with this net assets is equal to capital plus cumulative profit minus cumulative drawings. Therefore, a year change in this would be an increase in net assets is equal to increase in capital plus net profit for the period minus drawings for the period. Rearranging this formula, drawings is equal to capital introduced plus net profit for the period minus increase in net assets is equal to opening net assets minus closing net assets plus capital introduced plus net profit for the period. So the option is following option is not correct, and because share capital introduced should be added, not deducted, and closing net assets minus opening net assets plus capital introduced plus net profit for the period. So following option is incorrect because opening net assets should be added and not closing net assets. Also capital introduced should be added, not deducted. Okay. So which of the following journal entries is correct according to their narratives? Here. Um Receivable ledger account debit, irrecoverable debts account for irrecoverable balance written off. No, BA is not correct. Then we have bonus issue of 18,000 shares of zero point 0.5 each. Okay. So share premium debit and share capital credit. Yes, B is the correct answer here. Okay. Debits and credits are the wrong way around in A, C, and D. So that's the thing. B is the right answer. Now, what journal entry is required to record goods taken from inventory by the owner of a business? Debit drawings, credit purchases. It is the correct answer. Goods taken for own use are the redemption in purchases. Then we have next question. Which of the following is represented by the residual interest in the assets of the entity after deducting all its liabilities? So D is the right answer here. What is defined by the following statement? A present economic resource controlled by entity as a result of past events. Okay, that's asset. Okay, we all know it. Then we are moving ahead. Even a sole trader has taken goods during the year for his own use, valued at 1350. This has not been recorded. What will be the effects of accounting for these drawings? So profit will increase, assets will have no effect, and liabilities will have no effect. Okay. As some goods have been taken by the owner of the purchase, figure should be reduced, credited, which will increase profit. There is no effect on assets or liabilities. The debit entry uh, is to drawings, which is a reduction in capital. Okay. Which of the following formula may be used to calculate the profit of the business? Opening capital minus drawings plus capital introduced minus closing capital. No. Closing capital plus drawings minus capital introduced minus opening capital. Yes, B is the right answer. The formula is in accordance with the accounting equation. Okay. Then next question. Henry Tate Company is about to prepare its annual financial statements. In the following exercise, identify which of the financial statements prepared by the Henry Company are the following items likely to appear. Okay. Revenue will appear in statement of financial position. Trade receivables, sorry, revenue will appear in statement of profit or loss. Sorry. Trade receivables will appear in statement of financial position. Tax payable. Okay. Uh, Tax payable will appear in statement of financial position, and retained earnings will appear in statement of financial position again. Now, next question. Lynn makes a profit for the year of 20,000. Net assets at the start and the end of the year are 100,000 and 160,000 respectively. If the capital introduced during the year is 50,000, how much cash did in Lynn withdraw from the business for the year? Okay. So opening net assets 100, capital introduced 50, and profit is 20. 20 and closing net assets are 160. Therefore, we need our drawings here. So 160 minus 20 minus 50 and 100. We will get drawings that is negative 10. That's the answer. Okay. Now, Marina runs a business selling computers. She has been told that there are a number of ways of arranging the accounting equation. State whether the following versions of the accounting equation are correct or incorrect. Take the correct answers. Okay. Well, asset minus liabilities is equal to capital. It's incorrect. Um, Asset is equal to capital plus liabilities. It's correct. And finally, net assets is equal to capital is also correct. Okay. Well. Which of the following is not an appropriation of profit? Uh, Goods taken from business by a sole trader for a personal use. No. Interest payments to provider of finance. B is the answer. We do not even to look at other options now, because payments to owners of a business in their capacity as owners are apportionate, including salaries of partners, drawings by sole traders, are an appropriation of profit, whether money or in kind. Example, goods, interest payments are a finance cost to the business. That is an expense. Interest paid to the partner for a loan to the partnership is also an expense. The partner receive it in the capacity of the finance provider. Which two of the following accounts will be debit balance in the statement of financial position? Uh, okay. Prepayments and inventory. Prepayments, a prepayment is a current asset, so it is a debit. Inventory is a current asset, so it is a debit. Accruals are current liability, so they are the credit, and the tax payable is a current liability, therefore it's a credit. Okay. Which two of the following items would be classified as non-current asset? Damages expected to be received from a legal case, a warehouse used to store inventory, a license to reprint a book, a motor vehicle held by a car dealer. Well, B and C are the correct. The warehouse is a tangible non-current asset and the license is an intangible non-current asset. The damages can be recognized as a current asset if its receipt is confirmed. If they are not just probable, they will simply be disclosed as a contingent asset. The motor vehicle held by the car dealer will be for resale, so it is treated as inventory. Well, the IFRS definition of an asset determine whether or not an economic resources should be included as an asset in an entity statement of financial position, indicate whether each of the following must be satisfied for an economic resource to be classified as an asset. Okay, well, the resource must be owned by the business. Correct answer is no. The resource must be controlled by the entity as a result of past events. Yes. It must be probable, more likely than not, that the resource will be produce economic benefits. No. And the resource must have the potential to produce economic benefits. Yes. It is the correct answer. These are the correct answers. The resource must be controlled by the entity, but that does not necessarily mean owned. An example of an asset that is controlled but not owned is an asset that is acquired under a lease agreement where the legal ownership remains with the lessee. The definition says that an asset is a present economic resource controlled by the entity as a result of past events. There is no requirement for it to be probable that the resource will produce economic benefits. It just have to have the potential to do so. An asset is economic resource. The definition of economic resource given by the framework is a right that has the potential to produce economic benefits. Okay. The following criteria relate to whether an asset should be classified as a current asset. The entity expects to okay. The entity expect to realize the asset or intends to sell or consume it is a normal operating cycle. The asset is held primarily for the purpose of trading. The asset is cash. For a cash equivalent, the entity expects to realize the asset within the 12 months after the reporting period. Which of the following criteria should mean that the asset should be treated as a current asset in the statement of financial position? And the answer is B. If an asset satisfy all four of the criteria, no. If an asset satisfy any of the four criteria, so B is the correct answer. Okay, right. Definition of the liability as per IFRS conceptual framework is the present application of the entity to transfer an economic resources as a result of past events. Okay, yeah. Indicate in which of the following cases does a present obligation as a result of past events exist? Well, a restaurant business is being taken to court by the customer who has suffered food poisoning after visiting the restaurant. The restaurant admits that it was their fault that the customer was poisoned, and it is almost certain that the court will award compensation. So, yeah, yes. Okay. A fine payable by the company in respect of a breach of environmental regulation that occurred last month. The company has not yet received notification of the fine from the authorities, but is expecting to receive notification shortly. Costs relating to the new project that the management are thinking of undertaking in the next financial period. No. Last one. Interest for the next period on the loan that was taken out during the current period. No. Now, which of the following correctly defines equity as per the IFRS conceptual framework? Shares traded on the stock market. A situation where all employees are treated equally and paid the same hourly rate. Capital introduced in the business by the owner and the residual interest in the assets of the entity after deducting all its liabilities. So, yeah, it is the right one. D. Then next question. Which of the following would be classified as income according to the definition of IFRS conceptual framework? Capital contributions made by the owners during the year, interest received on loans, increase in the market value of the business land and buildings. So, two and three. Therefore, C will be our answer. Okay. Income is defined in the IFRS conceptual framework as increase in assets or decrease in liabilities that result in increase in equity other than those relating to the contributions from the holders of the equity claims. So one is the contribution from owners, that is holders of equity claim. So is not classified as income. And two and three both are result in increase in equity, therefore they are classified as income. The increase in the value of the land and buildings would not be included in the statement of profit and loss, would be reflected in the statement of other comprehensive income. Well, indicate whether each of the following would meet the definition of an asset. A license awarded by the authorities given an airline the right to operate a particular very profitable route. Yes, it is asset. Okay. Knowledge and expertise of the staff in the accounting department who have professional qualification. That's not an asset for them entity because they do not have a control over the employees. A well-known brand name developed by a manufacturer of sports clothes, the brand enables a manufacturer to charge prices that are higher than similar unbranded products. So yes, it is the right answer. And research expenditure spent on understanding better the causes of a particular illness. The expenditure has not yet to be development of any new commercially viable products, so it's not an asset yet. Okay. So far, so good. We are done till here. Now we will move ahead with more questions. So let's start with it. So here is the question. Which activity would happen immediately prior to the issue of the IFRS to check that the standard is workable and of appropriate quality? Well, a release of a discussion paper to encourage debate about the accounting issue. No. IFRS Interpretations Committee would promote its usage. No. It would be tried in the UK and comments invited. No. An exposure draft would be released, inviting readers to comment. D is the right answer. Okay. So prior to the final IFRS being issued, an exposure draft is released inviting readers to comment. Answer is incorrect as the release of a discussion paper to encourage debate about the accounting issue would happen earlier in the process. Answer B is incorrect as the IFRS Interpretation Committee would not promote a standard usage immediately before it is released. Answer C is incorrect as the ISB is globally body that releases standards to many countries, not just the UK. Therefore, an IFRS would not be tried exclusively in the UK. Indicate whether each of the following ethical principles is necessary to demonstrate good governance when preparing financial statements: integrity of directors, competence of accountants, objectivity of investors, confidentiality of management. Well, integrity of director is necessary. Competence of direct accountants is also necessary. Objectivity of investors not necessary, and confidentiality of management is also not necessary. Okay. uh, which one of the following statements defines the phrase going concern as it relates to a business? The business will continue to in existence for the foreseeable future. Yes is the right answer. you know then which two of the following are the qualitative characteristics expected of financial information? Faithful representation. Sorry, here. Which two of the following are the qualitative characteristics expected of financial information? So, faithful representation and verifiability are the correct options. Further, which one of the following international accounting regulatory body takes account of the needs of emerging economies and small to medium size entities? So, IFRS, here it is. Which one of the following international accounting regulatory bodies takes account of needs of emerging economies and a small and medium size entities? So IFRS Foundation is the correct answer. Is need of emerging economies and small to medium size entities. Next question: which two of the following entities are activities are the duties or responsibilities of directors? Well, to disclose detailed risk management strategies, no. To prepare understandable and transparent financial statements, to appoint independent external auditors, no. To determine whether the company is going concern or not. So D. Which one of the following statements defines the business entity concept? And the answer is the business and its own are always legally separate. No. The business exists as a sole trader, but no. The financial statements of entity should contain all transactions related. No. For accounting purposes, the business is always treated separately from its owner. So D is the right answer. Then we have the next question. Ali has leased a motor vehicle for his use in his business. He pays lease rentals over a 36-month contract period. Ali's accountant has told him that the motor vehicle has to be included under non-current assets in the statement of financial position, even though Ali does not legally own the vehicle. Which one of the following concepts relates to capitalization of Ali Motors vehicles, even though he does not own the vehicle? Materiality, accruals, consistency, or substance over form. So yeah, T is the correct answer. That is the substance over form, showing the substance of the transaction rather than its legal form. In this case, Ali has control over the vehicle and will be using it to generate economic benefit over a number of years. Okay. Indicate whether each of the following statements about the qualitative characteristics of financial information is either true or false. Well, notes to the financial statements are used to explain how a business accounts for its transaction. This is an example of ensuring understandability. Yes, true. Financial information is backed up by the documentation that provides evidence of its occurrence. This is an example of comparability. No, it's false. And the last one, the financial information is prepared on a regular basis to ensure management can react quickly. This is an example of timeliness. Yes, it is true. Okay. Now, a new international financial reporting standard has just been released. Which of the following accounting regulatory bodies is responsible for providing guidance on disclosure requirements where there is uncertainty in the original standard? Uh, Here it is. A new international financial reporting standard has just been released. Which of the following accounting regulatory bodies is responsible for providing guidance on disclosure requirements where there is uncertainty in original standard. IFRS Foundation, no, it's IFRS Interpretation Committee. It is the one who provides guidance on issues that have been arising on the implementation on standards. Okay. Indicate whether each of the following statements concerning the objectives of the IASB in formulating IFRS is true or false. So, to raise the standard of financial reporting, it's true. To reduce information gap between managers and information, it is also true. To ensure compliance with national standards, it falls. And to aid comparison with financial statements of other companies, it's also true. It's true. Okay. Red company have discovered an error in the valuation of the inventory. The accountant has said that this error must be corrected because it is of sufficient size that it will affect the opinion that readers of their financial statement have of the company. Which of the following accounting concept is being applied in red company? So it's the option A, that is materiality, refers to whether someone would take a different view of the business if an error or misstatement was not occurred. Okay. Majid matches his purchase order with the good receipt note and the invoice before he pays his supplier. Which of the following qualitative characteristics relates to Majid's accounting documentation? Uh, Timeliness, understandability, verifiability, materiality. So yeah, it's verifiability. Margins documentation creates an audit trail to trace where the order came from, how much it is, and whether it has been received. This means it is auditable and thus has verifiability. Uh-huh. Moving further ahead, which one of the following describes the role of the International Accounting Standard Board? Provide guidance on issue not addressed in international financial reporting standards? No. Develop and publish international financial reporting standards? It's B is the answer. Which of the following accounting concept is an entity primarily applying when depreciating a tangible non-current asset over its useful life? Substance of accruals, materiality, business entity. And yes, it's accruals. Okay. This is correct as the accruals concept promotes the idea of matching an expense with the benefit derived from it. In this case of a tangible non-current asset, depreciation reflects the wearing out of the asset over the life when it is helping to produce revenue. The other options are accounting concepts not relevant in the situation. Okay. Now, SAG depreciated his equipment on 10% reducing balance basis. He used this policy since he started his business 5 years ago. He believed this policy best reflects the economic use of the asset, and similar businesses use the same policy. Which two accounting concepts can be applied to SAG's depreciation policy? Uh, well, it's accruals and consistency. The option refers to the matching concept where the cost of the asset is matched with its use. The statement of profit or loss will carry a charge for depreciation each year to reflect economic benefit. The option necessary refers to the same policy being used throughout the asset's life in order that the economic accounting information is comparable. This would be true for sets asset. Which combination of the following circumstances is most likely to be the result of issuing a new IFRS, an existing standard? Okay, an yeah, existing standard may be partially or completely written. Issues are not in the scope of existing standard. Issues raised by the uses of existing standards are explained and clarified. A current financial reporting practice modified. So 4, 2, and 1. That is, option B is the correct. IFRS not issued to clarify users issuing concerning application of IFRS. Now, question. Consider the following statements. Items are reported in the statement of financial position based on the presumption that the entity will not be required to create cease trading. Non-current assets are always valued uh, at historical cost in the statement of financial position. I would say describe the accruals concept, uh, and statement two is false. Sorry, I would say describe the going concern concept, and it is false. Okay. Statement one describes the going concern concept. Statement two is false, as many non-current assets can be valued at fair value. Okay. Consider the following statements about the IASB conceptual framework for financial reporting. Does not change because it sets out underlying concepts. It is intended to assist users in financial reporting statements. It is an international financial standard. So, which of the following statement is are true? Well, statement two on that is true only is correct. All other are false. Now, following are the stages in due progress of process of developing a new IFRS standard, issuing a discussion paper that has set out the possible options for a new standard, publishing clarification on the IFRSs, drafting an IFRSs, analysis the feedback received on a discussion paper. So 1, 3, and 4. 1, 3, and 4. That is C is our answer. Okay. Which one of the following accounting statements application of the accruals concept? Well, charging rent to the statement of profit is than how much has been paid during the year. A is the right. Okay, charging rent to the statement of profit on rather than on the how much time has an example of matching income and expenses to the period they belong, which is the accruals concept. Okay, B, C, and D are the incorrect concepts. D is the showcases the application of substance or form. C shows the application of going concern concept, and D showcase the applications of uh, business entity concept. Mayang values all of her inventory using FIFO and has done so since she began to read her financial statements include a detailed description of the valuation method. So, which two of the following qualitative characteristics of financial statements could be used to describe Mayang concept? Okay. Uh, so, A and B are the correct answers here: understandability and comparability. Okay. Some accounting concepts relating to timing. Are the following statements are true or false? Okay, the going concern basis should be used to if the business is expected to cease trading within the next 6 months. Yeah, true. And accounting for expenses that the business has incurred that the business has incurred but not yet paid for. An example of using the substance over form concept, false. Some accounting concepts relating to the presentation of information in the financial statements. Are the following statements true or false? The concept of consistency should always take precedence over the concept of faithful representation. And verifiability means classifying and presenting information clearly and concisely. Well, first one is false, and second one is also false. Okay. Uh, Now, moving ahead. One of the following characteristics of IASB conceptual framework for financial reporting is that financial information is faithfully represented. Which of the following is not an example of faithful representation? Materiality, free from error. Yeah, A is the correct answer here. Materiality is not part of faithful representation. It is an aspect of relevance. Other three characteristics are part of faithful representation. Which of the which body has sole responsibility and authority to issue an IFRS? And for me, IASB, International Accounting Standard Board, is has a responsibility and authority to issue an IFRS standard. Which body provides guidance on financial reporting issues that are not specifically addressed in IFRS? Well, IFRS Foundation, no. IFRS report interpretation committee, International Financial Reporting Standards Interpretation Committee, provides guidance of financial reporting issues that are not specifically addressed in IFRS. Then, which is what is the main purpose of the IFRS conceptual framework for financial reporting? To assist the ISB in developing and reviewing standards, the D is the correct answer here. All others are incorrect. This is the principal purpose. Then some of the qualities of the useful information in financial statements are free from error, completeness, materiality, and neutrality. Okay. Uh, which of these qualities contribute to the attribute of financial presentation? So it's 1, 2, and 4. B is the right answer. Which of the following principles underlie the double entry bookkeeping? Well, accounting equation, separate legal entity concept, duality concept, accrual concept, accounting equation, business entity concept, accrual equation, business entity concept, and duality concept. C is the right. Now, which two of the following are necessary of financial information to be a faithful representation? So A and D are the correct here. That is, there should be no errors in the information, and the information must be presented without any bias. Are the correct options. Okay. Next one. Indicate whether each of the following statement is true or false regarding the going concern concept. An entity is no longer a going concern will be declared bankrupt. If an entity is not a going concern, this affects the valuation of assets. An entity is going concern is expected to continue to operate in the same manner for the next 5 years. And if the going concern assumption does not apply, that fact must be disclosed in the financial statements. So entity is no longer a going concern will be declared bankrupt. No, not necessary at all. Okay. Then if an entity is a going concern, this affect the valuation of assets. Yes, it is very much true. Then An entity that is a going concern is expected to continue operate in the same manner for the next 5 years, not next 5 years. It is for a foreseeable future. That means for upcoming 12 months. And next is if the going concern exemption does not apply, the fact must be disclosed in the financial statements. Yes, it need to be disclosed, so it's true. The following statements related to the bodies that produce accounting guidance are the following statements about the bodies that produce accounting guidance, true or false? Mm, okay. IFRS are compulsory in country only if they are adopted by the country's standard setting body. Yes, it's true. Okay. Uh, when asking for opinions about a potential new accounting standard, the ISB will first publish an exposure draft and then a discussion paper falls. The ISB oversees the work of the IFRS Foundation falls. IFRS Interpretation Committee may consider issues that are not specifically covered in the IFRS. Yes, true. The body of the directors is collectively responsible for ensuring that financial statements are prepared in accordance with local GAAP. Adequate accounting records are kept, financial statements are filed according to law. Which of these responsibility can be delegated to the finance director? So one, two, and three all can be done delegated to finance director. So D is the correct answer here. Then which one of the following is not one of the duties of a director? To act in the best interest of the company, to appoint the company auditors and receive the audit report, to prepare the company financial statement, to ensure that the company complies with the relevant laws and regulation. So B, which one of the following is not and one of the duties of the director, to appoint the company auditors and receive the audit report. B, the company auditors are appointed by the shareholders, although in practice the directors may do this. The appointment is made on the behalf of shareholders and the audit report is addressed to shareholders. So B is the right here. And then another question. So the offsetting principle means that an entity shall an offset assets and liabilities or income and expenses unless required or permitted by an IFRS standard, whether each of the following are the true or false in applying the principle. Bank overdrafts should not be netted off against positive bank account balances unless the bank has the right to offset the overdraft against the current account. It's true. Trade receivables must be shown at their gross value in current assets, and the allowance for irrecoverable debts should be shown within current liabilities. False. Original cost of non-current assets should be shown in the non-current asset sides of the statement of financial position, and accumulated depreciation should be shown separately as non-current liability. Loans used to acquire non-current assets may not be deducted from the value of those assets, but must be shown separately in the liability section of the SFP. So it's true. Which of the following statement is correct? Okay. Regarding the objectives of the ISSB standards aim to provide information about sustainability related risk and opportunities. The disclosures required by the standard is primarily for investors and other capital market participants. The standards ignore any existing sustainability standards that may already have been in use. The ISSB believed that existing standards were inadequate. So answer A, 1 and 2 is correct here. Okay. Which who set up the International Sustainability Standard Board, ISSB? Okay. The United Nations, the IFRS Foundation, the ACCA or IFAC, International Federation of Accountants. So It's IFRS Foundation who did so. Okay. Zoo has changed the way she classifies depreciation of machinery in statement of profit or loss. Last year, Zoo had included machinery in cost of sale, but this year she decides to include it within administrative expenses. Zoo has not made any disclosures about this change in the year's financial statements. When qualitative characteristics or contributing factor has been breached, prudence considering comparability. Where okay, so C, that is 2 and 3. Okay. Changing the classification means that the presentation would not be consistent with the previous year. Consistency has therefore been breached. Since consistency is a contributing factor in comparability is also breached. Prudence refers to the existence of the caution when making judgments under conditions of uncertainty. This is not a judgment relating to uncertainty. Therefore, prudence is not breached. Okay. Khan wishes to borrow money from a bank to buy a new piece of land but does not wish to show a loan in his statement of financial position. His bank has suggested that the land is bought in the name of the bank. The bank would then rent the loan to Khan. The rent would be equal to the amount that Khan would have repaid in interest and capital repayments had to taken out 10 years loan. After 10 years, the land would be transferred into Khan's name. Which statement would this agreement is correct? Okay, the commercial substance of the transaction is that bank has bought the land and is renting it to Khan. Khan should not therefore recognize the land on financial statements. The commercial substance of the transaction is that bank has lent Khan the money to buy the land and the rent is actually a repayment of the loan plus the interest. However, Khan should recognize legal form of the transaction, so the land and loan should not appear in Khan financial statements. And finally, the commercial, not finally, but by the way, the commercial substance of the transaction is that the bank has lent Khan the money buy the land, and the rent is actually a repayment of the loan plus the interest. Khan should recognize the land and the loan in its non-financial positions. So C here is the correct answer. IFRS states that where commercial substance and legal form diverge, the financial statement should reflect the commercial substance. In this example, the proposal by the bank aimed at hiding the commercial substance of the loan by treating it as if the bank had bought the land and has renting it to the Khan. However, the fact that the rent is same as would be used to repay a loan over the 10 years, and the fact that after 10 years, ownership of the land would pass to the Khan does suggest very strongly that this is a loan rather than genuine rental agreement. So, which one of the following describes best describes the historical cause convention? Certain assets are recorded at cost that would have applied on the day business was found in no. Transactions are initially recorded at cost at the time of transaction. So B is the right answer here, right? And I hope it is clear till here. Now let's continue with the next question. Which two of the following documents are sent by a business to their customer? So it's a quotation and it's sale invoice, which are sent by business to their customer. Okay. Now, next question. A business operates system where a sales and purchases module are integrated with the general ledger. The bank, inventory, non-current asset records are of systems that are not integrated with the general ledger. State whether each of the following transactions would be recorded in the general ledger automatically or by using manual journals. So it's year-end adjustment to record outstanding liabilities, not yet invoice. It's a manual journal. Okay. Um, Correction of errors in the ledgers, again, manual journals. Sales of goods on credit to new customer, it's automatically. And the last one, purchase of a motor vehicle for cash for long term use in the business, again, the manual journal. Okay. State whether the following statements regarding the accounting statements are true or false. It's all cool. True. First one is true. That is, accounting statements allow management to monitor their spending in areas such as capital expenditure and payment of utility. And the last one, an accounting statement allows management to use value their business entity because it records assets and liabilities false. Identify whether following documents are issued by the customer or the supplier. Uh, so quotation will send by the supplier. Good dispatch note supplier. Sales invoice suppliers. Remittance advice customer. Okay. Okay. Which two of the following statement describe the purpose of a goods received? Note. Well, to provide internal evidence of the items delivered by a supplier, to ensure that the business only pays for goods that have been delivered. So A and B are the right one. Which of the following statement is a benefit to the business adopting computerized accounting system to record financial information? Lower total cost of implementation, reduces threats to security and theft. Information recorded is likely more accurate, and yes, is the right answer. Recording information through a computerized system, a likelihood of human error such as data entry error and calculation. And the next question, which of the following is not a feature of computerized accounting system? Allow backup of data in the events of lost files, integrated with other management system to observe, provide real-time management. Multiple users can use accounting software remotely. So D is the correct answer here, right answer here. Then we have the second last question for this session. Sylvia has a business selling handmade children's toys online. Some of her customers, such as Michael, are well-established retailers, and Sylvia, these customers are 1 month credit. Sylvia records sales on a sales module, which is integrated with the accounting system, so that you know the details of sales and trade receivables are automatically posted to the ledger accounts in the accounting system. Sylvia received an order from Michael. Sylvia checked the inventory and confirmed acceptance of order by email. A delivery note was produced showing Michael's address for the delivery, along with the quantity of each item sent. Following are the delivery, an invoice was produced by the system and sent to Michael. At what stage would the sale be reflected in sales account and trade receivables account in general ledger? I would suggest the correct answer is when the sales order was received from Michael, no. When Sylvia confirmed acceptance of the order, no. When the delivery note was issued, no. When the invoice was produced, D is the right answer. Okay, and then we have here it is, the last question of the day, of the session. Okay, John bought some goods on credit from Lodwig for $1,000. When the goods arrived in John's warehouse, it is discovered that 20% of the goods were faulty. The value of the faulty goods was 200. Lodwig had already sent an invoice of 1,000 for the goods, so issued a credit note to Johan for 200. There was no sale tax or discounts. What would be the correct journal in Ludwig's journal ledger to reflect the credit note? Uh, Sales debit, trade payables credit, no. Trade receivables debit, sales credit, no. Debit, trade payables, credit purchases, and debit. Yeah, so see, that is trade payables debit and purchases credit is also wrong. And the last one, sales debit, trade receivables credit. The D is the correct answer in this case. The credit note reduces the value of the sales made to Johan by $200. So some business may initially look the credit note to the sales return account. The journal could be debit sales return credit trade receivable. The balance on the sales return account would then be deducted from the sales for the period in this question. No sales return was mentioned, so the amount would be directly booked to sales. Item A, B, and C all are wrong. The money, because in A, the money Johan owes is a trade receivables, not a payable. In B, debit and credit are the wrong way around. And the C, this is the Ludwig would book into his journal ledger on receipt of the credit note. So this is it for this part. We did almost four areas in the session, and I hope it is all clear to you. And if you guys have any questions or if you guys want to give your feedback on this particular class, you can contact me on my WhatsApp, which is I'm writing just here. And that's it from my side. See you soon, all very well. And yeah, for other areas of this sessions of ACCS Study Hub, the questions mostly are available. All questions are available on my accountancy portal website, which is www.accountancy.com. Thank you and